Good day, everyone. You are welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. This week's focus is on leveraging the high fixed income returns before a rate drop. In 2024, the Monetary Policy Committee of the Central Bank of Nigeria raised interest rates 6 times, resulting in a total increase of 8.75%, bringing the rate to 27.25%. As of December 2024. This decision aimed to control inflation, which stood at 34.8% in December 2024, and to stabilize the naira by attracting investment into naira-denominated assets. The naira reached a low of 1,900 naira to a dollar in February 2024, but closed the year at 1,645 naira to a dollar. Additionally, the CBN implemented other initiatives, such as the Bloomberg B-Match system and allowing Bureau de Change (BDC) operators to participate in the official foreign exchange market. To put things in perspective, the Treasury bills rate opened the year at 8.4% and closed 2024 at 22.9% for the 364-day bill. Consequently, demand for the 364-day bill surged to 3.1 trillion naira at last week's primary market auction, as investors positioned themselves to take advantage of the high interest rates. This has led to a consistent drop in interest rates at the last 3 Treasury bills primary market auction, resulting to a decrease to 20.3%. Consequently, the yield, which is the return on investment, has also decreased from 29.2% to 25.5%. We believe that the decline in interest rates may continue due to the stability of the exchange rate and the expected moderation in the inflation rate this year. As a result, we encourage investors to act now and take advantage of the current attractive interest rate on fixed income investments before they drop. Therefore, our focus this week is on strategies to maximize the benefits of the high interest rates. Primarily, investors should be mindful of reinvestment risk. What is reinvestment risk? Reinvestment risk refers to the possibility that when your investment matures or you receive a return on your investment, you may not be able to reinvest that money at the same rate of return you initially received. This risk often arises when interest rate falls. For example, suppose you invest in Treasury bills with a 15% interest rate for 90 days. When the investment matures after 90 days, you want to reinvest the money but find that the current interest rate has dropped to 10%. In this case, you would only earn 10% on the reinvested amount. This lower rate results in your overall earnings being less than what you earned from the previous investment. Some of the fixed income instruments you can invest in apart from fixed deposit include 1. Nigerian Treasury bills. Due to the significant interest rate for Nigerian Treasury bills, we have observed substantial interest from investors, both domestic and foreign. Last week's primary market auction saw a total subscriptions reaching 3.1 trillion. The average rate at last week's Treasury bills primary market auction declined to 18.9%, down from 19.4% at the previous auction. As previously mentioned, this high interest rate may not persist for another year if macroeconomic conditions improve. Therefore, we recommend investing in longer tenors, such as the 364-day Treasury bills, since a potential reversal in interest rate will not affect your investment until they mature. The minimum investment for Treasury bills is 50 million in the primary market auction and 100,000 naira in the secondary market, though this may vary among banks and investment firms. 2. FGN Savings Bond. In February 2025, the Federal Government of Nigeria Savings Bond was offered with interest rates of 17.8% for the 2-year instrument and 18.8% for the 3-year instrument. By investing in either of these maturities, you will benefit from these rates for 2 or 3 years, even if interest rates decrease in the future. The minimum investment amount is 5,000 naira, while the maximum is 50 million naira. Interest is paid quarterly on a prorated basis. You can subscribe through your stockbroker. 3. Commercial papers. Due to rising interest rate on Treasury bills, the interest rate on commercial papers have also increased, making them more attractive investments. The common maturities for CPs are 180 days and 270 days. We recommend opting for the 270-day tenor to take advantage of the higher interest rates, provided you can hold the investment until maturity. You can access CPs through your stockbroker or investment firms. The minimum investment amount is typically 5 million, although some companies may set a lower minimum of 1 million naira. 4. FGN or corporate bonds. This investment option is recommended for those with long-term funds, as maturities can extend up to 40 years. Savvy investors tend to purchase bonds when interest rates are high. Currently, the average interest rate is around 18%, with shorter maturities 2 to 6 years offering an average of 21%. In contrast, longer-term bonds 22 to 25 years are trading at an average of 17.8%. Therefore, investors can take advantage of the 2 to 6 year FGN bonds to secure a rate of over 21% per annum. This means that investors will benefit from this rate even if overall interest rates decline to 10%. However, there is potential downside. If interest rates continue to rise, you might miss out on additional gains. Nonetheless, this scenario is unlikely to be significant based on historical trends in interest rates. The minimum investment in the primary market is 50 million, while in the secondary market it is 20 million naira, or subject to the minimum set by your investment manager. Interest payments are made twice a year, every 6 months. Given the anticipated decline in interest rates, it is important to capitalize on the current high interest rate environment. Additionally, due to the high inflation rates, seeking investment with higher returns is essential to protect the purchasing power of your savings. By implementing these strategies, you can potentially maximize your returns and safeguard your savings, paving the way for a promising financial future. Thank you for listening. Please join us same time next week for another interesting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send SMS to 070-8246-3747. Stay blessed.